Hello to our webinar on a very important topic, which is usually not much discussed even among progressives, and that is taxation. The OECD, the Club of the Rich Countries, has formulated now models to harmonize taxation around the world in order to make it more difficult for multinational corporations, big multinational corporations, to avoid paying taxes in countries where they earn money. And as everyone knows who is filing their own tax returns, that the devil is in the details. And it is an extremely complicated matter. And for that, we have invited two wonderful experts, Professor Ghosh, who is a well-renowned macro and development economist, having taught and researched for many years at the Jawaharlal Nehru University in Delhi, and is now in Amherst, University of Massachusetts, a place where quite a number of progressive economists are residing there. And we had advertised our webinar with Sven Giegold. But Sven Giegold is now part of the team of the Green Party in Germany that is negotiating the coalition with the Social Democrats and the Free Democrats. And the negotiations are taking place today, so he cannot be with us. But we were very fortunate that a member of the German Tax Justice Network, Christoph Trautwetter, was willing to jump in on very short notice. He is also known by a recent study that was released on who owns Berlin, or who owns the city, revealing the property structure in the real estate market of Berlin. Well, let me briefly tell you 2 or 3 sentences about the OECD initiative there. As I already mentioned, it is very complex. They have so-called 2 pillars. The first pillar tries to address the problem that digital corporations can earn a lot of money by selling their services and goods abroad, but they are not paying taxes there. And therefore, the first pillar of the OECD wants that the multinationals will also pay taxes in the countries where they may not have a presence, but are selling and earning profits. So in the market destinations. And the second pillar is to try to have a minimum corporate tax for multinationals of now 15%. That should apply to all of them in the various locations, so that a country like Ireland, who has a corporate tax only of 12.5%, now would have to raise it to 15% there. So that's, I hope, is enough of the background, and I will now turn to Professor Ghosh and ask concerning this OECD initiative of allocating a certain amount of the profits of really large multinationals to the market jurisdiction, meaning the places where they sell their goods and services. And the question is, in a way, is this fair to low-income countries that have become major manufacturing places around the world?
Well, you know, it's a very important question, and I'm going to begin by just a little bit more detail about what exactly this is. Because you see, it's not just about taxing where you're earning money. It's about the fact that currently major multinationals, of course the digital companies, but even a lot of others, hardly pay any taxes at all. The big multinationals get away with effective taxation rates of 4%, 5%. I mean, absolutely crazy tax rates, because what they do is something that's called base erosion and profit shifting. They keep shifting their revenues and profits across jurisdictions using intellectual property claims, that, oh, all our intellectual property is created in Dublin, Ireland, even if our office there is only 200 people, or in some other tax haven somewhere. They use these rules to get away with not paying any tax. So the proposal, and it's a very important principle, which I think we have to welcome the fact that this principle has been accepted, that you have to treat a multinational as one unit. You can't say Google Ireland is different from Google France, it's different from Google Germany, it's different from Google India, because we know Google is one country, Apple is one company. We have to treat them like that. And the principle is that every country should then be able to tax its share of the global profits according to a formula. Now, the formula the OECD has decided on is just, as you mentioned, markets. How much do you sell in every market? That's not actually fair, because a lot of that also depends on where you produce. So that's where the non-digital companies also, it's really quite important. So many multinationals produce in the developing world. They employ people, they have the mining, extractive corporations, a whole bunch of other corporations, they produce in the developing world, but apparently all their profits are made only in the countries they sell in. So the Independent Commission for the Reform of International Corporate Taxation, I'm a member of that, we have been arguing that you really have to take a formula based on the sales, the employment, and the assets in every country. So yes, a significant proportion, maybe 60% goes to sales, 20% to employment, 20% to the assets, which will give you a sense of what is called the significant economic presence. And based on that significant economic presence, every country should be free to tax. This would be a much fairer and more just allocation of the global tax resources. But there's more devil in the details of the OECD proposal right now. Every country taxes total corporate profits. Just like we get taxed on our incomes, companies get taxed on their incomes, which are profits. This proposal says, no, we won't tax all your profit. We will tax only the residual profit. What on earth is residual profit, you will ask? Well, it turns out anything above 10% is residual. Why? Since when has it become that, you don't tax profits that are 10%? That's ridiculous. No tax authority in any country does that. But for this, suddenly, it's only the excess residual profits, and that too only of the top 100 multinationals, not all the multinationals, which again excludes most developing countries. So it's been whittled down to such an extent that instead of getting what we have estimated as revenues of between 240, 350 billion, you're down to 7 billion is the additional tax that will be distributed, which is frankly a bit of a joke.
Well, thanks. That was a very nice introduction to the topic. Mr. Trautwetter, the EU has also its own initiative, which is much about transparency, that multinationals with a turnover above 750 million euro need to report how many taxes they are paying in each EU member state there, in tax havens and in other countries. The question is, will this force multinationals to pay their fair share in taxes?
Well, thanks for the invitation, first of all, and thanks for the question. So country by country reporting that you are referring to is an initiative that we are pursuing for nearly 20 years now, and is a very important first step to show how unfair, Mrs. Skosh already described, but how unfair the current tax system is. If we can see publicly how little tax big multinationals pay in each country, we can then get towards a fairer tax system. We can pressure our governments to reform, and tax agencies from each individual country can also claim their fair share of tax, right? So it's a very first step only. It doesn't already get us to the point of a fair tax system, but it is important to keep up the pressure to get there. Now, the OECD has implemented country-by-country reporting in 2017 already. So we've been getting the first reports, 2017, 18, 19, and this has contributed a lot to the reform that we're seeing at the moment. And now the EU is just taking the next step to make this internal information of the OECD public for everyone to see. And that is, I think, going to be a very important contribution going forward. But we're going to see the first figures only in 2023. And we're going to see figures only for European countries. All right, so it's a small step, it's an important step. It's not the fair tax system, and it's not the full public country-by-country reporting that we were hoping for. But it will definitely make our work as an NGO, our work as journalists, our work as tax agencies easier by getting a quick and easy overview of how unfair the tax system is and will still be after this OECD reform.
So it's really an important first step to establish a principle there. That not just the poor people need to open their pockets, but also the rich corporations. Now, moving on to the second pillar of the OECD, Professor Gosch, what about these 15%? Will this 15% not lead to perhaps freezing corporate taxes to 15%? And actually also lowering in certain jurisdictions the corporate tax?
This is a real concern, and I'm so glad that you asked that question, because you see, when ICRIT, the commission that I mentioned earlier, we had proposed 25% corporate as a minimum corporate tax. Why? Because that is the median across the world. In other words, half of the countries have corporate taxes above 25%. Most developing countries have corporate taxes above 25%, except for a few tax havens. Pretty much everybody has got at least 21%, typically above 25%. And 12.5% is the corporate tax rate of Ireland, which is a well-known tax haven. So in other words, what you're doing is bringing it down to the level of what is already known to be a tax haven. When the Biden administration first talked about it, originally, apparently in the draft, it was 24%. Janet Yellen, the Treasury Secretary, she announced 21% as the minimum tax. Of course, that was, Congress objected, the Republicans in Congress and so on. But eventually, to settle on 15, it's really very, very low. And the concern there is that if you say, well, 15 is our minimum tax, you are allowed to do more if you want, that will put so much pressure on governments, especially developing country governments, because multinationals will say, no, we are not going to accept, we won't come to your country if you stick to anything higher than 15. So there's a real danger that countries will be forced to bring it down to 15%, which would be, a really unfortunate thing, because it's not just that they have higher tax rates, but many developing countries rely much more on corporate tax revenue than the developed countries do. So they would actually lose a lot of fiscal space. And we know from COVID-19 that they don't have fiscal space already. They really do need these tax revenues.
Well, the question to you, Trautvetter, is to what extent does the EU take into account these concerns of the developing countries? Is it really more about maximizing their own tax revenues, or is it also a certain concern about just a global world?
Well, first of all, I should add that many of those concerns that Mrs. Gosch already expressed are concerns for us as well here in Europe. So if you look at the German corporate tax rate, it's around 30%. So 15% is not enough for Germany either. It also still creates pressure for the tax rate in Germany to go down further. and that would be very expensive for Germany and not in our interest either. And if you also look at the second pillar one that we discussed previously, the same story that Mrs. Koch expressed holds true for Europe. European countries lose from the lack of ambition. So if we would make pillar one more ambitious, if we would increase the share of profits of Google and the big multinational corporations redistributed towards the markets, towards the places where those profits are made, Europe would profit. So we just published a study, we calculated the difference for Google and for the big digital companies. Google now pays 50 million euros of tax in Germany. Now, if we would have a more ambitious pillar one, like the G24, for example, is asking, so we redistribute not just 20% of the excess profits, but 30%. That's not ambitious. That's a minimum demand of the G24. Germany would get an extra 30 million. If we would do a very ambitious, completely ambitious, Germany would get something in the order of magnitude of 300 million extra, right? So just to sum up, the concerns of the developing world and the European concerns very often are not so far apart. Now, there's another European perspective, though, and that's the perspective of Ireland as a veto player in European negotiations, right? So the EU and the European Commission, when they think about corporate tax reform, they always face the problem that there's veto, or that tax decisions at EU level have to be made unanimous. And then we always have the tax havens, Ireland, Netherlands, Luxembourg, Malta, Cyprus at the table, able to block anything that happens in the EU. And I think that's the essence of the problem. That's the essence why the European Commission is looking at a tax rate of 15% and doesn't want to go beyond that, because they hope that this is something that they can get adopted inside the EU, can get adopted unanimously with the tax havens. We've seen today that Ireland has already announced to increase their tax rate to 15% to fall in line with this compromise. And I think that's the lack of ambition at EU level is mainly due to the unanimity. And I'm pretty sure that if Sven was here, he would say that he personally cares about a fair tax system and would really love to see a more ambitious tax reform than what we're seeing at the moment.
Mm. Now, how shall one deal with these so-called veto players? Even within the nation state, you will find that cities, municipalities are in competition for investments and many times willing then to forego taxes for 10, 15 years there. So it seems to me pretty much also a political issue. So how does one actually then deal with these recalcitrant municipalities, countries, and so on?
Could I comment on that, Christoph? You know, of course, I don't know enough about EU politics for sure, and I'm certainly no one to comment on the internal dynamics of the EU. But in general, if you look at this issue, this whole emphasis on unanimity, not just within the EU, but in the OECD inclusive process, and it's always presented as a take it or leave it kind of situation. If you don't agree to this, then there will be nothing at all. You know, in a situation like this, I do believe you have to have a coalition of the willing. Why should coalitions of the willing only be about wars and bombing other countries? Why can't we have a coalition of the willing of major countries that are willing to actually do both pillars, willing to impose a tax on what they perceive as their share of global profits? Because Apple is not going to say, I'm going to stop operating in Germany. Apple will continue to operate in Germany. If Germany decides it is going to institute a tax on the total operations of the total profits of Apple, Germany's share of it according to a particular formula, Apple is not going to say, that's it, I'm leaving Germany. So if a few major countries get together and do this, they would automatically reduce the incentive for Ireland to be this really strong holdout with veto power. That holds also true for the US. So I do believe, and that a lot of this is not just about international politics. In fact, it's always presented as this country versus that country. It's really about the lobbying power of large corporations with their governments vis-a-vis all the people. Because everybody loses out in this. All the people, all the citizens lose out. Governments then say, we don't have money for this, we don't have money for that. We have to increase your VAT, we have to increase your fuel charges, we have to do this, we have to do that, because we don't have money. And we accept that and allow these multinationals to get away with murder. So I think there is a real scope for a coalition of the willing, but there has to be enough popular mobilization to make that happen. Even Ireland, the people of Ireland do not gain from this. I mean, the total increased employment is, I don't know, maybe 300,000 maximum. And you're losing so much in terms of your ability to have social services in the country, to have, what are seen as citizens' rights. So the way it's presented in the media, and often even by all of us, we fall into that trap of seeing that it's country against country, government against government. It's not. It's governments influenced by large capital against everybody else.
Well, from the German experience, one can really say that it's true. Our long-term Chancellor Kohl, for example, used the Swiss secret bank accounts to finance his election campaigns there. Or even now one can see that the right-wing party has also made use of these outside of Germany easy to use secret accounts there. And that seems that government officials themselves do like these tax havens for themselves too. And I think that needs to be scandalized. What is the strategy of the tax justice coalition in Germany, Christoph?
All right, so let me first say again, Ms. Gosch, I think we fully agree on nearly all the points, and our strategy is first to push the agenda of a fair tax system that includes fairness for the developing world, but also to translate that into a German perspective. And we have regular discussions here in Germany, and I fully agree. We have a very strong pressure from the interest groups, from the business groups to lower German tax rate. We've seen in the last 4 years, our government has at least resisted this pressure to lower the German tax rate, but is not very ambitious itself on introducing a digital service tax or going beyond the 15%. So that is something I would say our government is pressured not to be ambitious. I think they might also internally be not willing to be very ambitious, because there's some belief in the finance ministry that Germany benefits from the current tax system, and that is true. I mean, that's the OECD in Germany. That's where this unfair tax system comes from. And there is a belief in Germany that overall Germany benefits from the unfairness, because big multinationals from Germany basically take the tax base from the developing countries. And now we have an absurd situation, and that is our target, to make this understood in Germany. Basically, we have the absurd situation where you have big multinationals from Germany stealing tax base from developing countries, and then the US corporations stealing tax base from Germany. So in the end, because Germany steals from the poor and gives to the rich, Germany stays out quite balanced in the end. But why don't we redistribute from the US companies to Germany and from Germany to the developing countries? We would have a much fairer tax system. Germany would do equally well. And that's what we're trying to make understood here, that it's about, it's not about gain or loss. I think either way, Germany will be fine. And Germany is somewhere in the middle. right? And like you can take examples like Tesla, right? Tesla is opening a big factory in Germany now. And then Tesla won't pay a lot of taxes in Germany. They will pay all their taxes in the US. That's just like Mercedes now has factory in South Africa and doesn't pay a lot of tax. So Germany is both a market country and a production country and a home country to big multinationals, and is in the middle. And we're trying to change this pressure. We're trying to change this perception that Germany actually benefits at the base. And just one last thought, Mrs. Koch, to what you've said. It is true that a coalition of the willing would be possible. Apparently, we have a legal scholar from Germany actually that showed that even within the rules of the EU, a coalition of the willing would be possible. We have seen a coalition of the willing around the digital services taxes, where some countries have adopted it. So I think it's possible, but I'm not sure whether Germany really wants it for the reasons I have expressed, and we're trying to change that.
Could I just add to that? You know, Christoph, it's very interesting what you're saying, but there is another angle to it, I think, which you really should also be pushing politically. You know, what we're asking for is not some outlandish thing. You're really saying multinationals should pay the same tax rate as your domestic companies. That's all you're saying. You know, because multinationals currently can get away with it by doing all of this, you know, shifting profits around. A domestic company cannot. So the only demand is that it's a level playing field for both the domestic company and the multinational. And if that message comes home, then perhaps you would get a lot of domestic companies also on your side, willing to put pressure on the government.
Well, there seems to be also another downside of the OECD initiative. As I read in the newspaper, that the United States wants to link its agreement to the OECD initiative with the demand that all other countries are not allowed to tax digital companies in addition to that. Perhaps you have a position on that.
Yeah, it's exactly. So, you know, India, for example, already has a digital services tax, and several developing countries have it. We are being told, take it or leave it. If you want this agreement or anything at all, you have to be willing to give up on your digital services taxation. Now, this is not just bizarre, it's terrifying because there are no estimates of the gains you're going to get versus what you will lose. If the OECD knows anything, they're not sharing it, even with the developing countries involved in the negotiations. So you're actually being told to venture out in the dark, to be trusting of countries that, let's face it, you know, you can't trust in terms of all the previous negotiations, and commit yourselves to losing whatever revenue you're getting from this service tax on the basis of some supposed promise. And remember how small that promise is. It is 20% of the excess profits of the top 100 multinationals only. Amazon is already out of this. It's under 10%. It doesn't have to pay any taxes. It doesn't even enter that pool. So imagine what we're looking at. We're looking at nothing, very, very little money. I mean, maybe, I don't know, a few $1,000s, perhaps excessive, coming into certain countries. For that, they're being asked to give up all of their own independent ability to tax.
Maybe just to enforce this, so TaxWatch has calculated this for the UK, and it's shown for France and several other countries, that actually what Mrs. Koch said again is completely true. So France and the UK would lose more income from abolishing the digital services tax than they gain through the Pillar 1 rules of the OECD. So we can see it for the UK, we can see it for France, and it's most likely true for most of the developing countries that have a digital services tax. They're poised to lose more than they actually gain, or at least come out with very, very little extra income.
And to add to the devils in the detail, there's another really bad one, which is also buried in all of that, you know, voluminous kind of supposed proposal, which is that all these countries have to then submit to an international arbitration, which will be based in the home country of the multinational. So if there is any dispute, that country does not have the power to litigate or adjudicate or decide the matter. The matter will be decided by a tribunal based in the home country of the multinational, and you have to agree to that. Now, developing countries, we already have a really terrible experience with these international arbitration panels. I mean, you know, all of the bilateral investment agreements, etc. It's been a very, very bad experience. They're all investor friendly, investor biased. They typically work against the governments. But here you're saying you're going to commit to a panel that is even based in the home country of the multinational concern. What are the chances of getting a just resolution? So that's another really bad sting in the tail, which, you know, it's shoved in. By the way, this was not even there last week. It's shoved into this thing this week as a additional little detail, hoping that nobody will notice, and then they will all have committed to this.
Well, now we have already a few questions coming through the chat. And here, Benjamin Velasco from the Philippines is asking the two of you, initiatives to stem tax dodging presently arrests and the negotiations within the OECD with the US and EU maneuvering over their different proposals. Is there relevance in pushing for tax justice within this framework? Alternative, what role does unilateral actions or United Nations level talks have? Professor Ghosh, you want to start first?
Well, you know, ICRIT has been arguing now for at least 7 years that we must have a UN tax committee guiding these negotiations, that the OECD is absolutely the wrong place. They claimed that they made it inclusive. In fact, it's now called the BEPS inclusive process because they brought in about, I think, 128 developing countries. But it's really, you know those seminars where there is the speakers all get to sit around the round table and then the back chairs are lined with all of the assistants and the ones who just get to listen? That's the position of the developing countries. You're in the room, but you don't really have decision-making power. And in any case, it's not a genuinely inclusive. I mean, the developing countries are not even told the details on, given, as I mentioned, even the data that is required to be able to negotiate properly. And so I think the OECD process has been extremely unfair. I know many developing countries are very unhappy with it, but the trouble is that that's currently the only game that is recognized by the US and the EU. Now, the UN Tax Committee has actually made excellent proposals. The UN Tax Committee is working on this. It has got really good proposals. They are all very practical. They are doable. But you never hear about it because the major government players do not give that any importance. If the people of these countries demanded that, no, you have to listen to the UN Tax Committee, listen to what they're saying, this benefits all of us. It doesn't just benefit developing countries. Citizens everywhere will get more tax revenues in a fair and just way. That perhaps could create the pressure to shift it towards the UN Tax Committee. That's on the international negotiation front. But, you know, I go back to this other thing that in every country, you know, a lot of, certainly the advanced economies, but even some of the larger developing countries do have the capacity to just forge ahead on their own. And I think it's important to take some of those steps because that also gives you greater bargaining power in the negotiations. Let's face it, we're getting some of this because a lot of the US big multinationals are unhappy with the digital services tax. So we're getting some concessions being made. Of course, then they're trying to cover it up and tie it up so much that it's almost no concession. But that's how you get movement. You get movement by having a bargaining fallback position. And I do believe that in a world which is where the multilateral process is being so blatantly unjust and unfair, you have to have that unilateral position as well.
Maybe to add on, we have a very heated debate in the tax justice world about, and especially here in Europe, about OECD or UN. And I think, to be fair, there's two concerns, right? Obviously, the current decision-making is unfair and it's biased towards the EU, towards the UN, towards the US, and towards the developed countries that are making up the OECD. I have doubts whether the UN would create a much fairer solution. We also see that the US, the EU, the rich countries dominate the decision-making in the UN, and they will dominate the decision-making on tax, whether it's in the OECD or through the UN. they will find, powerful countries will find a way to influence global decision making. I think there's no magical fair solution that just by shifting the decision making to the UN we'll have a fair tax system. And there's the second question of capacity. At the moment, I think the UN committee doesn't have the capacity to do global reforms. We'll definitely have to change that. We have to strengthen that committee. And I think, so now going ahead, I think the two things that from my perspective would make sense. First of all, do what the Fakti panel has proposed. Find ways to shift the expertise from the OECD, the capacity from the OECD towards the UN, and make the OECD or whatever process you choose more inclusive, and create kind of I think the Fakti panel has found a nice medium ground to connect the expertise and the capacities that are there already with a fairer process and oversight and control through the UN. And I think the second thing we should be looking at is something like in climate, right? A UN tax convention. So an international process that is not just a tax committee, but that is an international process that discusses this whole debate again and gives it the necessary attention that it needs. And also the necessary transparency. I think that's the main advantage of the UN against the OECD. At the OECD, every negotiation is behind closed doors. It's ministers negotiating, or even public servants from the ministry negotiating on behalf of countries. There's no official position agreed in parliament. There's no, so the whole diplomatic process that you have within the UN, that you have public, open positions by different countries, doesn't happen in the OECD. There's really experts behind closed doors. That I think that would by itself already make a big difference. Even though, as I said, I have big doubts whether in a UN process we would get a fair tax system anytime soon.
Okay, yeah, I agree with you. I agree that there is this global power imbalance, and pretty much everything international is going to reflect that global power imbalance. And a lot of the stuff in the UN already does, whether you're looking at the Security Council and all of those things. So I agree with you there. But having said that, there is, first of all, the very important point about transparency that you mentioned. Secondly, there is necessarily much more voice of developing countries. You're not just, kind of invitees sitting there clutching your little invitation sitting in the back. You are part of that process. And let's face it, capacity is a function of resources. It just depends on how many accountants and lawyers you can hire. That's all. Why does OECD have so-called capacity? Not because the ministers in the OECD are that much smarter or better or experienced. It's because they can hire more lawyers and accountants. That's all. And so that's just a question of the big players, the advanced economies, being willing to fund that capacity in the UN rather than in the OECD. That's a political point. That is not a capacity point. To call it a capacity point is obfuscating the issue. It is the political decision of the advanced countries, which reflects the global power that you were talking about, which has kept it in the OECD rather than in the UN or in a broader sense.
Well, the term residual profits had been raised, and one of our attendant people, Juan Sebastian Ramirez, sent a chat question. Given the novelty of this residual profit, what is the history behind it? Whose idea was it? How is this able to being held in such a high-level discussion? Do you have any
That's a really
ideas?
good question. And the simple answer to this is that there is no history behind it. There is zero history behind this concept. Find me one tax system anywhere in the world that says we will tax only excess or residual profits. There just simply isn't one. Conceptually, it doesn't exist. In theoretical terms, it is meaningless. And it is empirically invalid. Nobody has ever done this. It is suddenly inserted, again, it's the lobbying power of the multinationals. How do we reduce? Okay, we have to admit to this because there's too much noise and we have to agree to it. How do we make sure we actually end up paying nothing anyway? That's suddenly you throw this in. And why 10%? Who decides that anything below 10% is fine, normal profit, apparently? Now, do you do the same thing to your domestic companies? Do you tell domestic companies we will only tax your profits above 10%? You don't. So once again, how is this even being taken seriously? How is this accepted as a norm? You know, I think, Christophe, you made some very interesting mention of the estimates that were done for France and Germany of the amount that you would get at different tax rates. But supposing, in fact, you taxed the entire profit, not just the residual profit. You took even 20% of that entire profit. You would get much, much more, because it's absurd, this idea. And the very fact that this can then be taken on board, nobody's questioning it. The global media is just saying, yeah, this is fine. Everyone's accepted it. It's the power of the combination of global corporate lobbies with global corporate media. And of course, then G7 leaders helping it along, that allows such an absolutely ridiculous proposition to be taken seriously and embedded into any final result.
Maybe let me add the advocate of the evil of the devil. So the idea, at least in theoretical perspective, of the excess profit was welcomed by some people in Germany. So there's a concept that you have normal profits, and then you have profits that are extracted by monopolies, that are extracted by power, right? So you have normal companies that make a profit of around 10%, and that's how we got to that number. You look at average profits throughout industries, and then it's somewhere between 5–15%. So that's the normal profit normal companies make. And then you look at companies like Google or Facebook that make profits of 40%, 50% on their turnover. And then I think from an academic theoretical perspective, it makes a lot of sense to say this profit doesn't belong to Google. Google doesn't earn this profit because their employees are so much more profitable, so much more effective. But Google earns this profit, this extra profit compared to any normal company, because they monopolize the advertisement market in the internet, right? And that's why, for example, our labor unions really like this idea to say, okay, Google basically, when they charge, or Facebook, when they charge companies for their services, for their advertisement, they take some of the value that is produced by the person that markets its goods on Amazon, the person that advertises on Google. They steal some of that value added in Germany, or by German companies, or by any other company, because they can, because they're the monopolists, because they have that power, right? And that's, I think, why this excess profit in some way makes sense from that perspective, right? But then
what you're saying is that this is a tax on the rent, if you like. It's a tax on the monopoly rent, and you've decided that anything above 10% is the result of a monopoly rent.
Right, exactly. But
concept.
Then you should then this 20% of this excess profit. That doesn't make any sense, right? If you say,
I'm sorry, even that first one doesn't make any sense. Then why do you tax any company's profits? Maybe you should not tax anybody who's getting less than 10%. I mean, it doesn't make sense, right? A domestic company still pays whatever tax it is on their profits. You don't go around asking them, did you get 8%, 10%, etc.
Right. Well, I would like that. I would be only taxed by the difference of the very famous and productive professors, and the rest of my income wouldn't be taxed there.
But to be fair,
logically would be behind it. No,
it's
but
not like this.
No, I'm sorry, no, this one we have to disagree. Conceptually, it has no basis.
Yeah,
I mean, really, there's no conceptual basis for this.
No, but it leads to another question, I think, which is, I believe, quite important, that it is not so easy to mobilize people on tax issues there. There is quite a number of studies that have shown that people do concern a little bit about the low taxes of the rich. But once it goes above $150,000 or euros a year, people then would not say, well, let's have an even higher tax rate for those earning $1 million and so on. And it seems that a lot of those who have, in a way, a voice in the public are people with a pretty good salary, and they seem to be afraid of any tax debates because they might be hurt by it. And so I wonder how you would then try to raise that issue of tax unfairness in a way that it would mobilize more people. How would one do so?
So I think there are two things. One, we should definitely have a wealth tax in addition to an income tax. And for a wealth tax, you need a wealth register. You need asset registers that reveal who holds how much wealth. Then that tax should be on the extremely wealthy, not on 150,000, 200, maybe even half a million. It should be on the extremely wealthy, so that most people do not feel, in other words, that bar should be very high. You will still get a lot of money. In India, for example, one of my friends, an economist, did this calculation. If you tax the richest 965 families, that's all. The richest 965 families, you tax them 4% of your wealth, you get 1% of GDP. Now, 1% of GDP may not seem like a lot, but it is exactly equal to the total health spending of the central and state governments put together. We could double our public health spending by taxing just the wealth of the top 965 families. Now, when you are that rich, you frankly don't notice if 4% of it falls off in any real sense. So it's not just about equality, it's a real revenue raising measure. But I think the point is, to make it politically feasible, you have to make sure that the middle classes and even upper middle class elites do not feel threatened by it. You have to make the bar very high.
Maybe from a German perspective, just from a German campaign perspective, I fully share this. We have problems to mobilize people at the same level, like, for example, people were mobilized when it was free trade agreements, then people went in masses to the street. It's very difficult to reach that by tax. I think there's one thing that people agree, and all political parties actually in Germany now in the elections that just lie behind us agreed that digital companies need to pay more taxes in Germany, right? Even the conservative liberal parties think what these digital companies do is unfair, and they feel threatened by it. So if you tell anyone Amazon needs to pay their fair share, Apple needs to pay their fair share, that's something that really mobilizes people, right?
But you should be telling them that Amazon is not going to pay anything in this new system.
Exactly, that's what we're doing, and we're saying, so we're hoping that we did exactly this also with our finance ministry, but in the German public, we're saying, okay, what you have negotiated there doesn't make Apple and Amazon and Google pay enough taxes here in Germany. And that has received a lot of attention. I think that really makes people feel left behind, feel treated unfair. I think that's one thing. But the deeper truth, and Professor Ghosh has also expressed it already, the deeper truth is we have to make people understand that the rich company owner pays less tax than his or her employee, right? And that's what happens if you have a minimum tax of 15%, right? So if big corporations pay 15%, and then maybe in the best of worlds, the shareholder, the owner of the company, pays another 25% on his capital gains, on his investments, on his dividends, and that's in rare circumstance, 20-25%, then he pays 30% of tax. If he doesn't distribute at all, he just pays 15%. Now the normal employee in Germany pays 45-50% of tax and social security. And that's, as I said, that's the underlying truth, to show that in our current tax system, the company owner pays less tax than the employee. And that's going beyond only corporate tax, that you will have to talk about how we tax capital, how we tax wealth, and then we'll get to that truth. I think that's a point that we have to make more visible, and then I guess it always helps to illustrate it. And Professor Gosch has made an illustration for India. I want to add one for Germany. If we would tax one of our richest people, that is the owners of BMW, the car maker, they didn't do anything to be so rich. They just inherited the shares from their parents. If we would tax them 2%, and we're not as ambitious as in India, 2%, each one of them could finance a university of 5,000 people for every year. And they would still only pay half of what they earn from the shares that they didn't produce themselves, right? So they would still get richer without doing anything. They would get richer, and the tax would still raise enough money to finance a university with 5,000 people. And I think that's the only way to go forward, to illustrate it, to show how unfair the tax system is, and to take the fear away from people. That is too complex. They don't understand, whatever. Like,
well, that fits well to another question I see in the chat. And the question is, what impact will Pandora Papers have on tax negotiations and the tax justice campaign? Yeah. Professor Gosch, you want to go first?
Well, you know, we've had Pandora. Before that, we've had, I mean, how many now of these Panama? We keep getting these periodically. And each time we think, oh my God, these revelations are so shocking that surely there will be a public outcry and response and people will be forced to do something. No, they ride through it. You know, you kind of lie low for a bit, and then those same people are back there advising governments and setting up philanthropic foundations and, you know, etc., doing all that stuff. So certainly it should have an impact, but it's part of this broader problem that I think Christoph highlighted very well, which is that, you know, it's really difficult to get these tax issues as major aspects of public mobilization. Somehow we need to put it very starkly. You are paying more for your child's operation because the government is losing this much money on taxes. You are not getting this base, or so-and-so's pensions are being cut because, and so on. I mean, we need to put it very starkly and get people out there to realize that it's the other side of cutting expenditure. And it need not be. I mean, we also know that governments can manufacture money out of a hat when they want to, like in the pandemic. But usually the excuse given is, oh, no, we have to be fiscally prudent. We cannot afford it. We don't have the money. And part of the reason they don't have the money is because they're willingly giving handouts in the form of not having to pay tax to large corporations and the very rich. So somewhere, if we can get that out much more, then, you know, you would get that response. Right now, people read about it, they say, oh, isn't that shocking, and oh, shame on them, and they did this, you know, slimy thing of shifting out of the country and so on, and that's it, it's over.
Mm-hmm. And what's your opinion about the Pandora Papers, Christoph Trautvetter?
well, I think the Pandora Papers are another good push to our campaign, right, and to the campaign for more tax justice. I think the Panama Papers were historical, right? They pierced this secret world, and now the Pandora Papers show that things haven't changed quickly enough. They open up this secret world even more, and just give another impetus to the changes that the demands that are being discussed already ever since we had the Panama Papers. But I would say two things about the Pandora Papers. First of all, there's the tax haven for multinational companies, and there's the secrecy jurisdiction for tax evasion and criminals. And I think the Pandora Papers, because they have letterbox companies from Panama and Belize and places that big corporations usually don't go, are more focused on the second part, tax evasion, criminals, going around laws. It's not only tax evasion, right? You go around all possible kinds of laws that are democratically made by keeping your wealth secret. And concerning the first part, tax evasion, tax avoidance by multinationals, we've seen other leaks. We've seen the Lux leaks. We've seen the Paradise Papers. that we're more closely to the multinationals and to the places where the multinationals are. And I think that in overall, the best way for a solution is transparency, right? And that's why we're calling for country by country reporting to make the tax practices of the companies transparent. And the leaks help us to make the shadow world visible, just like beneficial ownership transparency would, beneficial ownership registers. And then we have to find a solution, and that's my last point on that. The Pandora Papers also have some depressing news, right? That a lot of the heads of state are closely linked to that shadow world and to the profit shifting, and it's just public pressure in the end that will help us to make a difference. We can't wait for international negotiations. We can't hope for all the elected and rich and powerful that are there to make this difference for us. It will need the pressure from the streets to make a difference.
Well, that is a good message. I have one last question from the chat, and that is the question of how to tax cryptocurrencies like Bitcoins, users of blockchains. That is probably the issue of how to tax speculative profits and appreciations of assets. What is your idea on that?
You know, Bitcoin is a bubble. And it's going to burst. It will burst as soon as other central banks get the message that China's central bank has already sent out, which is that if there's going to be a digital currency, they're going to be on top of it. And as usual, China is ahead of the game on this one. Other central banks are going to follow suit. So Bitcoin is a bubble that will burst. Do we then tax the profits that are being made right now currently? Well, insofar as you can tax all financial profits in speculation, which we don't. We really do not, because we don't have adequate capital gains taxes. We don't have adequate wealth taxes. So I would put Bitcoin along with all the other money that comes from speculation in commodity futures, speculation in energy futures, speculation in general, in housing, etc. I would put it in there, except that I would say that it has less of a future than the other forms.
Yeah, maybe also cryptocurrency. I think it's a bubble, but it's also maybe overstressed. If you look at the financial secrecy, right? Cryptocurrency helps shifting money around the world in very bad and anonymous ways. That's maybe part of why it is a bubble, because it's a way for dirty money to hide. But if you compare the size of crypto and you compare the size of the banking sector, I would still say don't overstress cryptocurrency. The biggest by far and a multitude bigger share of dirty money is still in the traditional banking industry, is still in the bank account and not in the crypto wallet. So we might have some criminals shifting towards crypto wallets and some people escaping in the crypto world, but the main problem is still the financial sector. It's still the normal bank account, and it's still where we have to tax companies, where we have to tax wealth, where we have to tax individuals.
Well, thank you very much for this rich discussion, very insightful comments on the issue of a global tax regime. We do hope that people will start questioning their governments more of how they act in the field of international tax governance, and especially, of course, the governments of the rich nations. I think they are the key drivers in that play. Thank you again very much for your very rich insights.
Thank you. It was a pleasure, and thanks a lot. Good to meet you, Christoph. And good to see you again, Christoph.
Christoph.
Yeah, see you again, and thanks for organizing.
And all the best to those who had listened to us, and it will be put, I suppose, on the internet, so that people who have different working schedules, who were not able to watch us now, can do that later on. All the best.
you.
Bye-bye.
Bye-bye.
Bye.